Hello everybody, what's going on? Few important updates are coming from NEO's closed door meeting. CEO Lieben just delivered a profitable roadmap that is not just cutting cost. It's about a fundamental sustainable business transformation. This is the positive shift the bulls have been waiting for, and it makes NEO's story incredibly compelling for 2026. So, what's the biggest takeaway from that Lieben message? A complete change in philosophy. The old game was chasing aggressive sales volume at any cost. The new game starting now is about total gross profit. The company has undergone a complete different change since this year. No longer setting a sales target, how many vehicles must be guaranteed, but pursuing real business result. Now they are paying more attention to total gross profit derived from sales volume into unit price minus cost. This is a subtle but profound change in focus, moving from a pure growth at all cost to high quality organic growth model. Second mechanism. The frontline team now has direct P&L responsibility, calculating the profit of each vehicle they sell. This injects financial discipline at every level. Third, the goal maximizing the dollar amount of profit, not just the number of cars sold. This is the essence of a mature, sustainable business. Neo is not just talking about this shift, they are already executing it across all three key areas that are already showing results. First, high margin product mix. Neo prioritizing models that bring in most gross profit. The high end premium models like the all new ES8 are now the stabilizing force for performance, boosting an excellent vehicle gross margin of 20% or more. By focusing on these high margin, high demand vehicles, and they have already got huge orders, NEO is effectively raising the average profitability of their entire fleet. Second thing is the supply chain optimization and the cost control. The company is working relentlessly to achieve better supply chain stability and cost reduction. This relentless focus combined with increasing scale is why the vehicle gross margin is already showing sharp improvement, recently hitting the highest level in the years. Lieben is confident this margin will further increase as they scale up. The financial numbers are reflecting this discipline, with net loss in third quarter of 2025 significantly narrowing compared to the previous quarter. Apart from that, they have also the power of three brands. This new shift is a clear sign of maturity. They are moving out of the volatile startup phase into the execution phase of a global automaker. The new CPU driven management system forces every employee to think like an owner, optimizing for profit, not just vanity metrics. Their target is also clear. Management is confident in achieving quarterly break even in the fourth quarter of this year, with the ultimate goal of full year non-GAAP profitability in 2026. Apart from that, they have proprietary edge. They continue to build their structural competitive advantage with proprietary technology and charging swapping infrastructure, which creates incredible customer loyalty and brand power effect. The roadmap to profitability is often volatile, but the management team led by Li Bin has already clearly laid out a logical, disciplined, and margin focused path. For investors who have stood by the company's innovation, 2026 is shaping up to be the year where that patience will be rewarded. The numbers are moving in the right direction, the strategy is sound, and the market opportunity is vast. The new story is now officially about profit, and that's the most bullish news of all. So get ready for it. With that said, thank you so much for being here. See you in next one. Hello everybody, what's going on? Few important updates are coming from Neo's end. This image is circulating on the Weibo today. Seems like testing of the L80 has been started. This is really important news because after the launch of this vehicle, analysts will definitely re-rate their price target for the Neo stock. The launch of this vehicle was originally planned for this year, which has been postponed to the first or second quarter of the next year. Now on the surface, a delay is never a good news. But here's the critical context. According to Ledao President Shen Fei, the delay is due to the better expected sales of the L90. They are successfully managing an overwhelming demand surge and volume driven segment. This vehicle L80 is confirmed to be more affordable than the L90, is packed with premium future proofing technology. First, it offers next gen performance. It uses the same rear wheel drive motor as the flagship Neo 89, giving it a powerful 340 kilowatt motor in standard version and a combined 440 kilowatt output in all-wheel drive model. This isn't just an entry-level car. It's a performance entry-level car. The L80 will be equipped with a cutting-edge 900-volt platform. So why this is a massive deal? Because it supports 4C supercharging, allowing the battery to go from 10 to 80% in just 15 minutes. Apart from that, it also gets benefit of the Neo ecosystem like battery swapping system and power swap stations. Now let's look at the financial implications for Neo. This car is explicitly designed to be more affordable than the L90, especially with BAS battery rental plan. The L80 is a volume driver Neo need to achieve significant scale and hit profitability target. The 900V platform standardization across Ledao and Neo brand is key to improving manufacturing efficiency and bringing significant costs down through economic of scale. This is a clear path to improve vehicle margin. By offering a vehicle with a premium 900V charging speed and unique advantage of battery swap network at mass market price, the Ledao L80 doesn't just enter the market, it disrupts it. It leverages Neo vast high cost infrastructure investment into a competitive advantage that rivals simply cannot match overnight. So in conclusion, while the headline is a slight delay, the underlying story is one of the overwhelming demand for Ledao sub-brand and the imminent arrival of truly compelling high-tech and high-volume vehicle. The L80 is missing piece in the puzzle, positioned to significantly boost delivery numbers, improve margins, and fully monetize the massive investment in BAS network. That is the reason why I say that this is not a time to panic. It is a time for patience and anticipation. The foundation is being laid for Neo to transition from a growth story to a profitable market leader in global EV race. So keep Neo on your watch list because this stock is set for a strong run in new year.